Hello, this is Mike Swanson of WallStreetWindow.com. I'm speaking with Jordan Roy-Byrne, who runs the website TheDailyGold.com. How you doing today, Jordan?
Hey, Mike. I'm well. Thanks for having me.
Well, it's been a couple weeks since we last spoke, and we spoke before the presidential election, and you, at the time, were saying that gold and the mining stocks were in a pullback phase. I was thinking the same thing, but I must admit that gold has pulled back more than I thought it was going to do. Today, as we were doing this interview, it's even below $1,200 an ounce. I didn't think it was going to go below that level, and yet it has done it. You did a post on your website a couple days ago saying that gold's bull market is moving off course. I'm going to link to it below this video, but I'll just start out asking you: do you think the bull market's over then, or what do you think is going on with this big drop?
Well, I think the bull market is really on it's off course and it's on pause. And the reason I say it's on pause is because I don't really. I mean, it's really semantics to me trying to debate. Oh, are we in a bear? Are we in a bull? Because what I think is going to happen is I think, I kind of I have a chart there in that article you mentioned where I show how gold could complete a big double bottom. Maybe it goes a little lower than 1050, and we kind of make a false new low at 1,000 or 980 or something like that. I think that's also a possibility. But to me, I think the bear market from 21 to 2015 is clearly over, and the move from early 2016, that bull move is now off course. That's definitely over. So it's kind of something in between a bear and a bull market. I don't. I just that's where I can put it, because to say the bull market is over, we don't know. The move that started earlier in the year is definitely over. But if you say, the bear market, we're still in a bear market, that can just give people kind of the wrong thinking, in my opinion, as we look forward in the weeks and months ahead. People can get the wrong idea. They can think, okay, now we're back in the 2011 to 2015 bear market. Everything's going to keep going down forever. We have to sell. We have to get out. To me, that's just kind of the wrong line of thinking. I just think that the bear market that we had was very extreme. It was extreme compared to history. And that's something that, looking at, the time and the depth of the bear market and how far it went, we're not going to see a resumption of that. Whereas at the same time, as I said, the move that began in early 2016, that move called the 2016 bull, that's clearly gone off course, or it's on pause, if you want to say that. So that it's kind of tricky to categorize it. I just think when we're categorizing it, we're kind of that can lead to kind of having the wrong interpretation of really what's going on here, in my opinion. I know that was a long and kind of roundabout answer, but I'm more concerned with what I think is going to happen over the next couple months to 6 months. And so as far as kind of categorizing it as a bear or a bull market, that doesn't make a lot of sense to me. I think it kind of it just kind of clouds judgment and objective analysis as far as the medium term here, and looking at what's possible, what's probable, and what's unrealistic.
That makes a lot of sense to me. One thing about the gold world or any financial world is there are people out there that they make lots of predictions of the future. They'll say, gold's going to 10,000, or the S&P is going to, 2,300, or it's going to crash to 700, or they give you these price predictions, and they create a scenario where it's going to go there in the future. Now, they never say it's going to go there in 6 months or 10 months. It's always way out in the future, and in that sense, it's almost a meaningless thing to try to make money on. It excites the imaginations of people to think of future predictions, whereas the trends of the that we're witnessing are how you make money, and you're looking 6 months out. And right now, obviously, gold today broke 1,200. It's been pulling back though since about July, but we're in a pullback, and the challenge is, when is it going to end? Because when it's over, gold and gold stocks, they go up a lot. So how do you think it could play out?
Well, yeah. I mean, I just to follow up on what you're saying, Mike. I mean, that's why, I think this is not a resumption of the 2011 to 2015 bear. Yet at the same time, the move that started in early 2016 is clearly over. I mean, there's been too much technical damage for that to continue. So that's kind of why the whole bull and bear market question, given those two things, I don't really have an answer. Right? But how do I think things are going to play out? Well, looking at the short term right now, I've been looking for a rally in the sector. I'm a little surprised that gold went below 1,200 today, but it's the day before a holiday, so it's a thin market. So I guess the stops got run. But if you look at the miners, they haven't made a new low yet. So gold made a new low. The miners haven't made a new low. And the miners have been really, really oversold. I've been looking for a rally for a week or two. It hasn't really happened yet. After yesterday, I was more optimistic. Just looking at the candles in the miners, it looked like they were going to start to rally. And even today, if you look at GDX, it kind of made a bit of a bullish hammer. It made a bullish hammer the day before. So even though it's gone lower, we're seeing accumulation candlesticks. And I'll reiterate the fact that the miners did not make a new low, even while gold made a new low. So I'm bullish in the short term as far as like the next couple of weeks. I think we're going to see a rebound. Gold, I was looking for gold to rebound from 1,200 to 1,250 or even 1,270. That clearly hasn't happened yet. I think right now we'd probably look for a rebound up to 1,230. That's where the 40-month moving average is, which has been extremely significant for gold throughout its history. And so we've lost that moving average. We could rally back up to it. Again, that's around 1,230. So I think the odds favor a rally in the short term, but eventually, Mike, I'm looking for that to go lower and for gold to possibly make a double bottom around 1050. I mean, the support targets are 1080, 1050, and then maybe it could go to 1,000 or even dip below 960, 980. Those are the targets I would look at. And if we see gold come down to those levels, I mean, I'm going to get really, really bullish on gold once we get below 1,100. I think this is subject to change, but I think when we see gold go below 1,100, that's going to be the time where you want to be buying miners again. And I even though gold could make a new low, I don't see miners making a new low. They're too oversold in the big picture, and there's not enough sellers left to drive the miners to a new low or even down to a double bottom. In my opinion, I think they're going to make a higher low. But again, Mike, this is I'm just looking at probabilities, and I'm kind of assessing the probabilities and thinking what are the possibilities, and I think the sector going lower towards these lows over the next couple months, and then having a really good turnaround. That's something that I'm looking for over the next 3 to 6 months. I'm looking for a bottom in the sector sometime from February to April, but I'm confident that the market is going to go lower in the next couple months. But as far as the timing, I mean, that's subject to change. I mean, who knows? They could bottom in January. They could bottom in May outside of my time frame. They could bottom in June. We don't know. We have to assess the possibilities and the probabilities going forward. But I do think the strongest probability here is that in the short term we're going to see a bounce, but eventually we're going to see a move lower into next year. And looking historically at when the bear markets have bottomed, they've really all fallen between February and April. So that's why I'm looking at the February to April time frame, and that makes a lot of sense to me, given the price action right now and given the time frame, because we're already below 1,200 right now. So I don't think this is something that's going to drag out too far down the road. but I don't think this is something that's going to happen in a month or two. I think it's going to take 3, 4, or 5 months for the sector to break down, bottom, then start to rebound.
Yeah, it makes a lot of sense to me. So as this situation unfolds, it's going to lead to a wonderful buy point. We saw what happens this year when gold stocks go up. They more than doubled. The GDXJ ETFs more than doubled. Tremendous run there. So, as time goes on in the next couple of months, I like to periodically touch base with you and see what you're seeing as this unfolds, because as you mentioned, we'll have to update and think about the different possibilities as this goes on. So as we wrap up, could you tell people what you provide on your website and what types of services they can get from you?
Yeah, thanks, Mike. They can go to thedailygold.com. I post all of my free work there, which includes an article per week, usually a video update per week. Any interviews I do like this get posted there. And you can opt in there for my free weekly newsletter, which I send out on Sundays, and that gives out all the work that I've done, and I share my short-term thoughts. So sign up for the email list. And I also have a premium service where I cover what I'm buying and selling, what I'm personally doing with my money. And we focus on market timing. I mean, the things that we talk about here, Mike. And also I focus on the junior mining stocks that I'm buying or looking forward to buying in the near future. And I'm even though we've kind of, as I said, things have gone off course here, I'm still extremely bullish on this sector in the years ahead. Just this weakness and this coming back down, that doesn't change my view that the junior miners are primed for spectacular gains in the next 3 to 5 years, and I think we'll see those gains after the next low in the market, whether it comes in February, April, or May, June, or after that. I'm looking for a big rebound in this sector, but right now is definitely the time where you got to be careful and conserve cash. You got to get cash ready to buy these bargains that are coming over the next few months.
Well, great. Well, thanks for talking to me and everyone else, and we'll catch up soon.
Thanks, Mike.